Wednesday. Welcome back to the final hour. This is Chris Pulver's 3 p.m. on the 25th. Another fairly calm day in the markets. Not a bad thing. Better than watching the market tank. It's better than watching the market melt up if you're not ready for it, if you're not invested in it. So it is what it is. We have the SPY technically down for the day. Here's a good look at price action. So we started out around 571, bumped up to around 571.88. We really didn't go much higher than the highs we saw last Thursday. So this is the Thursday high. We just poked those highs and faded off of it. There's not much of a driving factor. I do suspect that tomorrow when the market's at least having U.S. GDP numbers for the quarter, unemployment claims, and a slew of Fed speakers may be enough to get the market moving and shaking a little bit. China kind of picked up where it left off yesterday. Things were going pretty well across the board. Come on, bro. Get up here. Come on. All right. The golden child wants to say hi to everybody. So there's where we're at for the SPY. Let's go to the QQQ. This index actually broke the Thursday's highs from last week. Here is Thursday's high on the QQQ. We did officially open up above that for the first hour of trading today. You can see that we lightly faded off of those highs. So not a ton of direction. Here's the Dow. Last week's Thursday high was this on the 19th. We broke that high on the 24th. We broke that high again today with a gap up, and we faded aggressively the first hour in the Dow. So, I mean, we pulled back from around 422.99 all-time highs, pulled back a few points on the Dow. This actually is probably one of the worst performers in the U.S. market today. And then the IWM, same thing. We had highs back here in August. We had retested those levels this is September 17th, and then we posted that move during FOMC. The 18th was FOMC. The hour after we closed, we faded that, came all the way back up and gapped. Just a wild week, but we've been fading since those recent highs, not all-time highs in the Russell, but since those recent highs, which basically were reached around FOMC. The hour of FOMC and the closing hour, Russell has faded since then. So today, from about 220 and change down to about 218, another couple of points to the downside. So tail of the tape, we still have about 57 minutes for a close. But S&P a little bit softer, 0.22% to the downside. Q's hanging in there at 0.1% positive. Dow is down 0.65. Russell down over 1%, 1.34 before the close. We go elsewhere. Volatility index hasn't done much today. Thanks, Jan. Is that Jane? Yeah. Yeah, he's a little Frenchy. This is Benji boy just hanging out, giving you the side eye. So he's what you call a Velcro dog. So I guess I wouldn't have it any other way, but he does like to be cuddled. So the volatility index is flat on the day. We're not higher, we're not lower. Looks like getting back to 12 or 13 is quite a ways lower. There's certainly what I think is going to be at any time we could definitely have more of a volatility play. I'm not necessarily long on volatility right now, although I don't think it's a terrible trade. I just don't know if this melt up in market is going to keep working higher and volatility goes lower, because if we end up finding these lows at 12 or 13, then I'm probably just taking a trade long volatility for the next 30 to 60 to 90 days, and just plan on some type of move by let's say we get from like 13 back to 20. I would try to grab some profit on a move like that. But if we don't go much lower and we hang out here around like 15 or so, I don't know if I'm necessarily taking a long position on volatility, but I'm cautious that we could have some type of spike up and push in volatility. Let me go to the VIX term structure here, and I want to see where the next 30, 60, 90 days look like on the VIX. So this actually is calling for slightly elevated volatility. 18.5, 17.8, 17.7, 18.25. This is higher vol expected. So it's not done. Whatever we might see, whatever we might get, it is kind of approaching the market kind of day by day, which is why I do a lot of income trades, which is why I do a lot of short-term stuff to kind of pad the overall portfolio. If you cushion it with enough profits, then it helps in those drawdown environments. If you hedge every like 30 to 60 to 90 days, it helps those drawdown environments. I'm just trying not to be blindsided by anything that is going to be, quote, unexpected. So, look, we can trade everything under the sun that's like, there's no way I can lose in a bear market. It's not going to be fun, however it happens. I thought this was interesting. I shared this morning during one of my live sessions, not my face, but looking at this. So this is when the 10 and the 2 yield curve. So we had the longest inverted yield curve in history, over 400 some days, and then we finally disinverted. All right. So I'll show that chart in a moment here. But what's interesting is going back to 1980 to 2007. And I'm actually curious. Like, I think 2020 should be in here because we technically did have a recession and we did have an inverted yield curve that disinverted around COVID. But take something like this. The recession actually started 3 months before the market came out of the inverted yield curve. So 3 months earlier. October 1981, 2 months earlier. 1989, 13 months after. December 2000, 4 months after. 2007, 10 months after. So there's no crystal ball on when this recession, or if and when a recession, if at all a recession, actually takes the market by storm. Because the argument right now is that corporate profits are continuing to grow. We are going to be in earnings season in the as we start October and kick off Q4. Earnings season is right around the corner. If I look to see, let me go out in stock twits. Let's go stock twits and take a look. When does official earnings season kick off? It's probably the first or second week of October. It always starts kind of sluggish with financials. They kind of set the tone. How's the overall market looking? What's their forward guidance? If they're cautious, then that's gonna put I'd say earnings season on its heels a little bit. And then you have Mag 7, which is the big one. Like, how healthy are the top stocks in the markets, and is it enough to have the top performers continue to outperform, and is it enough to have the market breadth stay high enough that the advanced decline line is showing that most stocks are advancing as opposed to dropping? That was the odd thing this year, was most stocks were advancing. I'm sorry, very few stocks were advancing while others were stagnant. So it was more like the S&P 10. Everyone's talking about the Mag 7, but it was like the S&P 10, the Nasdaq 5 or 10, the Russell 100 or 200 instead of 2000, the Dow, 5 instead of 30. So it was very, very highly concentrated, which is why we did have that little, pullback in April that was taken back in May and June, because Mag 7 kind of saved the market. But as we rolled into July and August, it wasn't enough. Mag 7 didn't save the market. Think about how this market got back up to all-time highs. We got back to all-time highs not because of Mag 7, but because of the Fed. We still have fiscal spending. We still have now a more, I would just say dovish Fed. They're looking to normalize. They're not really looking to ease. This isn't quantitative easing, but money supply is going up, and the Fed is cutting rates. So this is a bit of a play similar to what Greenspan did back in the 90s, where there were rate cuts in the mid 90s that propelled us into another leg of expansion through the late 90s into 2000, before the market officially, dot-com bubble and burst. And that might happen all over again in a different way. We're not going to call it .com. We're going to call it probably AI. If it's an AI bubble or AI crash, or it's a tech crash, or it's a something crash, if there is a crash, who knows? But it wasn't Mag 7 that saved the market. It was actually, there's an interesting buy and dip. The employment news started to look a little bit more stable. The market was kind of reassured on August 5th in an aggressive way. Like, the market had been waiting for a pullback all year, and we didn't really get one. And then all of a sudden, August offered it, even though it was ugly and crazy and definitely Volmageddon 2.0. But anyway, I digress. So let's talk earnings. And I want to see when officially we kick off earnings season. So if I go forward to, let's go the week of the 30th. I'm not seeing any financials there. That's probably wrapping up earnings season for Q2. And then we'll go into the new part of October. This should be where we're getting some kickoffs here. Wells Fargo. Yep. So you're going to get JP Morgan, PGR, WFC. So that's Wells Fargo, JP Morgan. If you get a lot of those financials, it's going to be the 7th through the 11th is when we're kind of officially kicking off earnings season. So we'll have employment news coming out before that. We'll have inflation news coming out around that. We'll have earnings season underway, and we'll see what the overall consensus is for our companies, beating expectations. Are they delivering on EPS and delivering on revenue? What's their forward guidance? What do those transcripts say? Earnings calls are the most boring thing in the world, but you could actually use Chat GPT if you wanted to have them summarize an earnings call for one of the stocks you'd like to follow. I actually do that quite a bit. So that is helpful to kind of get some information. It's also interesting to see how many times AI is mentioned during transcripts now, because it is what is the trendiest thing in the markets, especially if you're in the semiconductor space or tech space. AI is all the rage. So, all right. So the 7th through the 11th is where my earnings trading will start to pick up a little bit, and I pick and choose very carefully. I go for if there are things that are liquid, I go for things that are priced accordingly. And yeah, I mean, earnings season is just one of many things that I like to trade, but I will probably take 20, 30, 40 trades during earnings season, out of thousands to choose from. But I try to pick what I think is going to give me some profit. So that is that. Let's see here. Will you be trading any mid-cap stocks or indexes this rate cut cycle? So that's a good question. I do have some exposure on the Russell. So the IWM, I am long. I do have some debit spreads out to January, February, March of next year. I'm looking to see if we can get back to all-time highs on the Russell. So there's still a lot of chop in here. We're still making higher highs and higher lows. We still have the all-time highs, probably 12 to 13% higher than current price. That's about 12% higher than current price. I'm not saying that the Russell is going to be the best thing to buy, because if the Russell is representing 2,000 stocks and only 200 of them are performing well, then it's not really the Russell that I want to look at. It's the Russell 200. Okay, which if I do Russell 200, I'm trying to think, is it IWF? No, IWX? IW. There's the top 200 value. So the top 200 Russell value, so the IWX, has actually made all-time highs by a lot. So the top 200 is obviously concentrated. You take what's performing well and throw it into the market, and you've got some good cash flow. You got some, good balance sheets. You have just adequate performance, and the IWX has outperformed the IWM by quite a bit. If you go to IWS, there's mid-cap value. There's F, which is growth. And this one is also, blown through the highs, but we had a crazy vol event with the Russell 1000 growth because of that August 5th drop. So I like the S&P 600. That's one way to play the 600. So we can do, I'm trying to think. I've never traded the 600, but I'm curious. Actually, you know what? It's not really the 600 that I like. It's mostly this. If I go RSP for equal weighted, this is probably what I'm more interested in trading. It's also a lot cheaper than trading the S&P. Okay, it's not as liquid, and as much as I trade options, I'm not really super active in the RSP. But as far as the dollar cost averaging, I would like to see if the equal weighted S&P will actually perform reasonably well. It usually, it's not going to outperform the S&P 500. If the SPY is up, the SPY is probably going to rip a lot faster with the RSP with some conviction. But this was a nice little catch-up trade, and you can see here that the drawdown was minor for that little August blip we had on August 5th. This dropped around 6.5% as opposed to 9.5%. So you get a little bit tighter drawdown. Obviously the rip to the upside. We came back from those lows and we are up around 9 to 10%. If we go back to the SPY and see what that looked like the same period, so we had our August 5th bottom, which shedded about 9.5%, right? 9.8% from top to bottom. And then the market from that August 5th bottom is up around 12%. So, you're dealing with a lot more volatility on the SPY than you are the RSP. But, the SPY is also like the most liquid US index. And I would rather just trade the SPY, the Qs, the IWM, the DIA. Just because if I own the shares, there's a lot you can do with that. You can lower the cost basis like crazy. And you can, generate some income on those. RSP is good, but I think it's more of like, I want to own it. I want a dollar cost average into it. And it's going to be like a long-term play. Okay. Let's see here. Pretty sure I saw a stat saying the S&P 600 outperforms SPX in a cut cycle. Could be wrong though. Well, let's find out. Let's go SP 600. Let's see how it performs. Now, number one, I don't know if I can trade it. Let me see if I can go. Let's see 600. S&P. Well, son of a gun. Ticker for S&P 600. All I see is 6X. 6X 600. Yeah, I mean, this is tasty. I don't see it. If anybody has a symbol for it, let me know. Otherwise, I mean, it's not the end of the world, but let me see what, I've got a carrot. It's probably not going to happen. S&P 600. Nope, not found at all. Everything I'm seeing on Yahoo Finance is right here. S&P 600. So there's got to be a way to trade it somehow. Ticker's MID, is that right? Okay. American Century Mid Cap. Here's S&P Mid Cap 400, MIDE. I don't want to leverage instruments as MIDU. So MIDE, I've never traded that before. Am I doing earnings? Yeah, I already did that, Francois. I did earnings early in my live session today. I posted that trade. It's in my Discord for my chart alerts through the A1 Trading Telegram Discord. Or I'm sorry, yeah, that was redundant. The A1 Trading Discord in my Chris's trade section. I ended up selling on Micron. So Micron is today after market. So in about 45 minutes, we'll see what happens. I'm hopefully gonna not see a big reaction. I'm looking for a muted reaction because in Micron I'm selling those options. So I'm risking about $350 to make $650. There's my trade right there. So I sold the 95 put. I sold the 96 call. I went 10 wide. The expected move is about $8, and so I'm looking to see if there's a somewhat quiet muted reaction that we can see that I can just extract that credit. So for a 653 fill, if this tomorrow by end of day is trading for like 450 or lower, I'll probably just take the profit, eliminate some of the outlier risk for Friday. Or if I'm confident that we're just hanging out at 95 or 96 without a lot of movement, I might try to go for the full kind of home run 100% profit of 650, which wouldn't be bad. I mean, if I take 650, I'm risking 350 and I end up making the whole boat, then that's just shy of a 100% gain. So not too shabby. SML. That's somebody just making up SMLR. I'm not seeing SML, especially in the US. So here's the SMLC. This is large cap long index. So there's got to be different ways to express mid cap here. Let me see what the US is for mid cap. So MDY, we've got the Spider Mid Cap Trust Series. Let's see what that is. MDY Holdings. Spider Mid Cap 400. Morningstar. Let me see what the holdings are. So I'll go to Morningstar. That's a pretty good report. We have holdings, top 10 holdings. Nothing that stands out. That's pretty equal weighted. That's way different than the heavy market cap that we see in the S&P. So healthcare, industrials, consumer cyclicals, basic materials, technology. During rate cuts, I don't know. I don't know. I mean, look, we can sit here and go back and forth on what's the best thing to trade. I will say this. If the market is not broadly bullish, it's not going to matter. Because what's not going to happen is you're not going to have the mid cap up here and the S&P down here. If the mid cap is outperforming, the S&P is probably still performing. And the Qs are probably still performing, and the Dow is still probably performing. Obviously, if everything turns south, there's nowhere to hide if we have a nasty bear market. So, and I'm not preaching a bear market. I just think that risk is something that you don't want to mess with. I think risk is something we need to be comfortable with. I mean, risk keeps us uncomfortable as traders year round. So what we're doing is trying to prevent getting blindsided by an event that's probably been bubbling on the surface for a while. And that's why I typically keep like 30 to 60 to 90-day hedges just in case. But overall, the broad market, it's going to go up if it's going to go up, and everything's going to go with it, and it melts up. So whether you're trading small caps, mid caps, large caps, I think the number one thing that's going to be happening over the next, let's say, 6 months or so, if we're going to see a melt up continue, I think the most important thing is going to be cash and growth. Okay. Because if companies are in good financial positions with the ability to reinvest or the ability to have cash at the ready, not be high debt, service whatever debt they have, and they're optimistic and growing, that's where I want to be. I actually I ran a filter this week, and I shared this in my Telegram. By the way, if you'd like to join me, I'll share 2 links today. So if you'd like to join me, I have a free Telegram service. All of you are welcome to join me. Most of you probably are. I also have a Discord. So my Discord channel and Telegram here are free. I will post both of those. Just give me a second here. So if I go to share, there's an invite link. So that's copied. So here is Chris Pulver Telegram. And in my Discord, invite, copy, and then Chris Pulver Trading Discord. There we go. So all of you, welcome to join. Okay, I want to go back and show. I posted a couple of pictures here. There it is, this guy. So I did a screener, simple, free screener using FinViz. I did at least a mid market cap, so over $2 billion. I'm looking for profitability and price to earnings. I'm looking for positive growth over the next 5 years. I don't want to look at a company that's like they're not profitable. They're not going to be profitable for the next 1, 2, 3 years. I'm not that interested in that company, even if it's dirt cheap. I'm not that interested in investing in something that hasn't made money yet or isn't making money right now. You are forcing investors and certainly shareholders to kind of say, prove it, prove you are profitable before you get bigger investments. And that's why the EV place has been in a rough spot since the SPACs all bottomed out in 2022. There's been some pops here and there, but I'm just out of the EV space altogether. I know China EV is a whole different thing because their production is way higher, unit sales are way higher. I just don't think the U.S. is going to embrace China EVs when we have automakers that are trying to do it here, and also we're going to tariff the crap out of them anyway if they come in. So anyway, profitable. For the next 5 years, I'm looking for positive earnings per share. I'm looking for something that has insider transactions. I don't want to see insider selling. Okay, I want to see insider buying or insider holding because that shows me that leadership is still committed to the process, as opposed to Nvidia. I mean, how many hundreds of millions of dollars did Nvidia CEO dump? And Jeff Bezos dumped Amazon, and even Musk has sold Tesla many times in the last like 12 months. So I'm looking to see who's willing to hold on to some of those shares or buy more. I'm obviously looking for stocks and symbols that are optionable and shortable. I'm not shorting just naked. It's going to be option related only. Average volume is liquid, so I'm looking over 1 million shares a day average volume. And then I'm looking for a target price that is higher. So it's not just, this is a company that makes money, but it's underperforming and it has, no outlook that looks positive. So I have 44 stocks, or it says 1 of 37. I think I did 1 of 35 here. And the nice thing about FinViz is it kind of puts it all in order of like the best criteria is stock number 1. So if you want to take a screenshot of this, you're more than welcome to. Not every stock is something I'm interested in, like Aptiv PLC in Ireland. I'm probably not going to trade that stock. There's a lot in the USA here. There's some in Canada. Canada is Lululemon. Interesting, which I know has been beat up like crazy. I could take it or leave it. I mean, I know some people love Lululemon. I'm sad to say that I have 1 pair of pants from them, but I've never worn them, ever. They're still sitting neatly folded with tags on them because out of principle, I'm like, I don't want to support Lululemon, but that's just me. But I know if anybody goes there and the stores are busy and you like the clothes, cool. But there's a lot of other impersonators of Lululemon. I know it's not the same, but I also don't like $150 pair of like athleisure pants. I think that's insane. So, but they are beat up pretty poor. I mean, if you look at the stock, it's way down and they do make a lot of money. I mean, discount wise, I'll show you the snowflake analysis here in just a moment. But Lululemon is down about 56%. And we take a look at, let's go to this snowflake analysis here. and I'll have a look. So let's go Lulu. And they check a lot of boxes, right? I mean, all the risk checks for this fundamentals, they look pretty good. Earnings are growing. They're forecasted to grow. They're trading well below estimated values. Let's see how frothy they are on price to sales. Price to sales 3.2, price to earnings 19.8. Not crazy high multiples. Fair value 315 is currently trading at 260. I've got a 259. You know what? I like it enough. I don't know if I want to own shares of it, but this is COVID. I don't know if I can. If I could own shares at 150, I'd be pretty happy. But let's see what the IV is. It's been selling off enough. It's probably decent. So let's go to IV rank on Lulu. It's a 36.8. Not fantastic. Let's go out. Let me go about 90 days. Here's 86 days out. If I were to sell or buy, let's see. If I bought a 200 and a 195, that'd be a 54-cent debit. Could I own shares? What price did I say from COVID? 150 or lower? I could probably get through this trade without. I don't like that trade at all. I mean, once you get further out of the money, these option prices are awful. So unless I want to say I'm good with 180, okay, like I could get a $1.14 credit for this trade right here, but I want to own the shares. This would be an ownership of around 173. I want to own it at 150 or 140. So the only way I can do that would be I go down to the 160. I get 23 cents credit, which is stupid. Like, I don't care about that trade. It's not an income trade. But if I were to see price drop, if price were to drop, let me find an arrow here. If price were to drop from current price down through this is a bear put spread. So if I buy the put, sell the put, that'd be $5 a max profit. This would actually serve as a profit trap. So if price never gets to 160, I'm not assigned. I keep the credit here. I keep the credit here, and I get the extra $5 kicker. So there's a chance to make about $500 on the trade. But the trade-off is if price just goes up, okay, if price goes up, I get 20 cents. Yippee skippy. And I'm tying up $1,600 to make $20. No thanks. So the options, just the premiums aren't that great. So I don't love it from like a ratio spread or like a kind of a put condor situation. So I'm probably not going to take that trade. How else can I get a trade going here? Let me go out a little bit further. Maybe I don't see any earnings on the calendar here. If I went out to January, maybe they're a little better. Could I do like a 190 by 195 and own it at 150? I don't know. I mean, even if I just get rid of these and I just do a cash secured put, do I want to own a stock at 15, taking up $15,000 in cash or $7,500 in margin? I mean, it's not a bad spot to own it, but I don't know if that's ever going to happen. Are we going to drop to 150 and have an additional sale? If we drop to 150, that is, I mean, COVID is down 75%. 150 is around 70%. That's a heck of a discount. I think what I'd rather do would be, okay, we have lows around 225. Let me see something here. This is another way to get some action here without any of the exposure of like a naked put. So let's go out 90 days. What I say 225 is that recent low. So 228 is the recent low. If I did these spreads are super wide too. If I did a 230 by 220, nope. I'm just not interested. So I get $2.45 for a $10 wide spread. I'm not interested in risking $755 to only make $245. Granted, like maybe we don't come down and touch 230, but that's way too much risk in this trade. So what I could do or could consider is the 230 by 220, which is a super wide spread. If we came down to retest 228, but we went up, what I could do is take this trade. I'm going to put in let's go $5, $5, which means price is going to have to fall. Okay, if price falls, near the money, at the money, I can possibly get filled for $5 credit. All I need price to do is stabilize from there, put the expiration out to December. Now, there should be some earnings on Lululemon at some point, which I don't know if it's good or bad. But technically speaking, we're kind of begging for a bottom here at 225. I don't know why the stock did so poorly. What I'm also not super thrilled about technically is if this is a double top, okay, and we break this low, is it possible for the stock price to go down here, come back and reject it, and then still go lower? Right. So, I mean, defined risk would be if I get paid on the trade for $5, I'm risking 5 to make 5. That's a fair trade off. If I'm wrong, I'm wrong. If I'm right, I'm right. But I don't want to take any assignment unless the stock price were absolutely going to drop down to that COVID level, and I'd say I'm going to buy it now. But that's about it. So I think this is a decent play. 230 by 220. The spreads are really wide. Like I said, let me change the expiration and see if this is a little bit different. So if I go to, instead of December, if I go to January, same thing. 230 by 220, 325. I'd still want to get $5 credit for it. We'll say there's Christmas shopping available at Lululemon. I'm going to try to get a $6 credit for this trade. So that way I can get $6, only risk $4. If I'm filled, I'm filled. It's a higher reward than risk. Price has to come to me. I'm not in a hurry. If it bashes through my level, then I can decide. If I'm not assigned, I can decide if price is falling. Let me change the color here. If price is falling, then I could potentially, use my long put, take some ownership, flip the stock for a couple of bucks and not take the loss. But number one, it's am I going to get filled on the trade? So that's the most important thing is if price comes to me and gets me filled at $6 a contract, great. And I'll assess from there. So I'm going to go ahead and put on a trade here for Lululemon. It's a 230 by 220. We get this trade out here. So buying power is going to be about $400, no big deal. Okay, let's get $6 in credit. This is going to be good till canceled. Okay, so Lulu, $6 is trading for $368 right now. Let's go similar. Need about 60 seconds to get these placed. In. Okay. Oh, not replace, not replace. Similar. There. All right, let me double check this for everyone's account. Pending, 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 pending. Good, 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 and good. Okay, so order is in. I will post that. So I'm doing a 230 by 220. So let me put this. I'm going to zoom in a little bit. Put in a long position. So 230 is down here. And 220 right there. So all I need is price to do its thing. Keep it around that 230 level. There we go. So this was a January 17th or January 16th? January 16th. Oh my gosh, dude. Never mind. I didn't realize it skipped an entire year. I meant to go out to this one. Hang on. I'm gonna cancel these. I'm gonna cancel these trades and try again. All right. Hang on a second. So cancel. Cancel. I gotta put the right timeline in here. I only want to go out to January 2025. All right, let's try that one again. So these should all be canceled now. All right, now January 17th, let's try the 220 by 210, trading for $2. Put this one at $6. Same trade. All right, try that again. So similar, and put this in everyone's account. There we go. Okay. All right, two more. There we go. Okay. Now it's in 117 expiration. 117 expiration. So that's this next January. The 230 sell put, 220 buy put, $6 credit pending. Okay. So it's a pretty black and white trade. If it crashes way below $200, I don't know if I want to keep it, because if I look left, we could end up, bottoming out way the heck down here, and I might not have enough time on that trade for that to happen. If it is way the heck down here, okay, fine. But I think I'm just going to take the $400 and not try to flip it. But we'll see. Number one, we got to get filled on the trade. So I'll take a screenshot of that. I'll post it in the Discord channel. So there we are. Copy. And getting this posted now. I'm putting this under stock options. So this is Lulu 1/17/25 expiration. Looking to see if Lulu will fall back to August lows and fill my credit spread for a high premium. One, looking for support levels to hold. And turn profit. Two, if the price were to crash to 150 and 125 area before expiration, I may be willing to own shares and repair the stock. Okay, so there's a screenshot coming in Discord in about 5 seconds. There it is. Okay, so that's a little Lulu. Back to that screenshot where I posted it, or was in Telegram. Here you go. So let me see if we have some. So Walt Disney, that's another one. Disney's premiums are just not that great. I like the stock. I've had Disney in my portfolio for a long time. It's not in awful shape. I'll come back to that screenshot in just a second. So Disney is DIS. We're trading at 93.99. I do think, there's some pretty strong support here around $80. I did add up some like 82.50 buy trades on Disney, but it's just not quite out of its own way. I'm looking at, will this structure hold? Do I get a chance to maybe buy it again at $80? Actually, here's another way that I can take this trade. I can set up like an 82.50 by 80 or an 85 by 80, set up a credit spread, see if price comes down to me. If it does, great. I'm willing to own more shares of Disney around $80. If I look at where we are fundamentally, Disney, okay, trading below estimated value, earnings forecast to grow, and let's see their price to earnings, price to sales. Price to sales is actually quite low. Price to earnings, not too bad. A little frothy, but fair value 127, we're at 93. So there's definitely a solid, upside 20, 30%. Do I want to get into it right now at 93? Not really, but a ratio spread might do the trick. Okay. Let's see, big hedge funds with high AUM. What brokers are they using? I think fund protections for small amounts. Well, every individual client has like SIPC insurance up to like $2.5 million. Most hedge funds are trading. Interactive Brokers is probably one of the biggest ones in the world. They have like $100 billion in cash. If anything were to happen in the financial markets, they're probably the most liquid, and they're global. So IB is the big one. Yep. I mean, Tasty uses Apex Clearinghouse, I think. There's a ton of money there as well. But Interactive Brokers is like the behemoth. I've seen their CEO on CNBC. When everyone was worried about Silicon Valley, and instead of talking about FDIC insurance, everyone's talking about what about my investment account? SIPC insurance actually is better than FDIC. Like brokers are way more liquid than banks than banks have to be. But usually every individual investor is able to get up to like $2 to $2.5 million of insurance with SIPC. So, and maybe that's enough to cover. Maybe that's not. Depends on how big your account is. But anyway, it's better to have it than not. And I'd rather have that. Like, I mean, I don't have any bank accounts over 250 grand. And honestly, I question if they even if I needed it and there was a bank run, I would even question if my $250,000 would be safe. You know. So, does that answer your question there? Ball out. Do I think Lulu's going lower? Not necessarily. If I don't get filled, I don't get filled. But what I'm not going to do is pay it for a price that I don't want it. I mean, I don't want to buy it now. Same thing with Disney. Disney's at 93 and change. I don't want to buy it now. I'm going to see if I can get Disney down to 80 bucks. And so what I'm willing to say on Disney is I'm willing to own some shares. We have an IV rank that's super low, so it's probably not going to be great on the premium side. If I went out 86 days and the spreads are wide, so this isn't a good thing either. If I did an 85 by 80 and then I did a 75, I don't like that. I could do a 90 by 85, get $1.41. That's still way too wide. And I'm only getting $1.40 for a $350 risk. I hate that. I'd rather do like the 85 by 80 and try to get like, I'm going to get $2 for this one. I'm going to try to get $2 for this trade. If it gets filled, awesome. If it runs lower than that, I'm willing to keep shares. I'm just going to do one contract trying to get $200 for income. If it comes down to $83 or $82.50, there's a chance I get filled here at $2. And this one should give me about a $200 profit for a $300 risk. I'm okay with that for right now. The premiums with an IV of only 13 are low enough that I'm not going to get a crazy amount of premium. So if I want to say, Disney, I like you at 80, I would own you at 80, then I can start with a credit spread to maybe express that's one way to get there rather than me trying to buy it now or do a credit spread now. If I do an at the money, sure, it's great. I get 215, but I'm still risking 285 and price can still fall back to support. So I'm going to take my trade and put it at support and see if I get filled at the price that I want. So here's Disney. So this is going to be another add-on trade. So that's not a bad way. And so all I'm doing is I'm picking through some of that, the filtering that I did, and I'm looking to see that account has it. Okay. This account does not. So let's go this one. This one. Did I just do this one? Yes. Okay. Okay, so Disney's in. I will add that to the mix. Disney. This one is a 12/20 expiration. Sell the 85 put. Buy the 80 put. $2 credit. Pending. Nice support lows at $80. Trying to get filled for credit spread if Disney revisits lows. Willing to own shares if price drops dramatically lower than 80. Otherwise, just consider the win loss on the credit spread. All right, so there is that. And let me get a screenshot of the chart. Nice support level at $80 right there. So stop loss pretty tight. Anything to the upside is profit. 85 sell put, 80 buy put, $2 credit pending. And there it is. So screenshot, posting this all in Discord. There it is. Okay. Anything else on the list? Let's see here. Energy. I already have some energy exposure. I've got some XOM, some CVX. I've got some XLE. So I don't think I'm going to add a bunch of these, but they do check some boxes here. EPD, ET. Let's see what they do. EPD. EPD. High level of debt, dividend. Wow, that's crazy high dividend, not well covered. Earnings forecasted to grow, trading well below estimated value. This one's probably just beat up like crazy. Let's go EPD on the chart. EPD. Well, what the heck, man? COVID to now. I'm not buying this thing. It's just been melting up higher. I mean, there's room to get back to these 2014 highs, but I almost wonder if we have something like this. If this is a big old breakout point that we just either test and test and test and test. If we can make this breakout, then yeah, there's some upside potential. Fair value, let's see what that's trading for. What do they do? Oil and gas pipelines. So production and trade of natural gas, petrochemicals, NGL pipeline services, natural gas. So this is a nat gas, 1998. I don't know. Energy can be a fickle thing. I'd almost like to see a bit of a pullback towards like $24. So I don't know. I think there's better ways than going a hog wild on energy. It's a good non-correlator, but if the markets go up, energy is going to underperform most likely. Utilities have been cranking this year. Energy's been making a comeback, but energy was in the dumps when oil was down 20+%. So I don't know. I don't think I'm ready to jump on the commodity / oil energy bandwagon just yet. FI, I can take a look at that one, sure. So EPD, ET, Ferguson Enterprises, that's industrial. We've got banks, we've got software, semiconductors for Intel. Intel checks the boxes here. I still think Intel, I looked at the snowflake analysis, is trading like, $22, $23. Fair market value says it's $4. I had a good run in Intel from 2020 to 2022. I think I'm good. Like, I don't know if I'm ever going to see that type of jump in return. I'd like to see Intel kind of, base around these levels. Like the stock just got absolutely annihilated and it's up to 2362. But I mean, this low was '08. Man, it's like I would consider if we retested the '08 lows, I would consider getting some Intel and not looking back. Like, I think that's something that if it's around enough to be a household legacy tech name and I can get this around like $15, it's worth considering sitting on it. And maybe 15 becomes 20, 15 becomes 30. There's good upside there. If it ranges all the way back up towards $50, $60, hooray. Otherwise, I'm just not buying it. I know there was a chance to catch like a $3 to $4 move, but that's just not me, not right now. So I'm going to see if this will just spend some more time basing. If it just goes straight up here, okay, fine. Because it came straight down, this could be a cup and handle. If we rip up here and pull back, if we get a confirmed breakout, then yeah, Intel does have some good upside potential. But if it is, pulling back here, coming back down to the lows, and then just taking time to base, I'd rather look to see if this rounds out the lows, breaks a trend line later on, and then we have an actual breakout pattern to see if this thing has the technical support that it needs. So I'm not taking the bait on Intel yet. FI is Fiserv. I mean, price is showing some strength, that's for sure. But the first thing I'm going to see at all-time highs is I'm not that interested at all-time highs. But let's check it out. FISERV. High level of debt. Forecast to grow. Trading below estimated values. But it's gaining on that fair market value. Price to earnings, price to sales. Not crazy high multiples, but high enough. Fair market value 193. So I don't know. I'd be cautious. To buy it now. Just me. I mean, if we get a pullback towards 160, maybe. But I want to see a pullback. So I don't know. I'm just picky. But there's a trend line. Even if we just use like the basics of, hey, pull back to a 200 moving average, pull back to a 50. Look, there's easy ways to play stocks. Like look at a 21, look at a 50, look at a 100, look at a 200. All these act as support. If price comes down and responds off of one of these levels, that's an easy buy trade. You can use that on a daily chart all day long. And I just see when they're overstretched and we're not touching the 21 or the 50 or the 100, I want to see if price will just pause enough for them to catch up or pull back in order to find a bounce. So not that challenging, but yeah, I'm going to wait. Any other ones before we kind of wrap things up for today? What else? We did Lululemon, Norfolk. That's oil and gas, specialty chemicals, beverages, Primo Water. Primo Water. See what that's all about. PRMW. Insurance, PRU. That's probably up to all-time highs. Prudential. Sitting up here near all-time highs. Freaking Progressive. Bunch of crooks. I don't know. A pullback would be great. Primo Water. Ugh. Primo Chemicals? What was Primo Water? PRMW. Primo Water. Not a lot of history to go on. November 2010 to now. Check it out. So PRMW. This is a Canadian company, so we're trading an ADR. High level of debt, profit margins lower. Okay. Vita Coco, the old coconut water company, cranking out some good snowflake analysis. Price to earnings a little bit high. Fair value 57. Interesting. Primo Water way above the other ones. Vita Coco at 30.3 price to earnings. National Beverage, Coca-Cola. What the heck does Primo Water do? What's their brand? Don't tell me it's the Paul brothers. What do we have? Bottled water, water filtration, coffee services, North America, rest of the world segment, filtration, all of the segments. So it's global. 1955, been around for a while. A pullback would be nice. PRMW. 25 on the IV. We only have monthly expirations. So options, not that awesome. Not that awesome at all, but keep that in the back of my mind. How about an old PepsiCo? PepsiCo trading at 169. Let's see if Pepsi can complete a pullback here. High, low, lower, high, lower, low. I'd love to get some Pepsi back in there for a little correction. Also, if we have this longer term trend line, that'd be about a 140 to 150 area. I'll be watching Pepsi for something like that, hopefully. Coca-Cola, son of a gun. So that 23 bottom turned out to be the ripper from 50. I mean, 51 to 71s. Nobody's getting excited about $20 a share, but shareholders love their dividends, love the stability. I mean, this stock from the worst of the worst through COVID pulled back about 38% when a lot of stocks were down, 60, 70, 80%. It maintained through 2022, which was a nasty bear market. Coca-Cola pulled back about 23%, which was less than the S&P at 25%. 25% roughly on the S&P, 38% on the NASDAQ. And Coca-Cola is now at all-time highs. So here's what I'd like to see. Wishful thinking, but if there is some Coca-Cola there or there, just give me a trend line. Put on a moving average. If we come back and test, this is a simple one. We come back and test the 200, I'll buy some Coca-Cola or put options trades around it, right? So if we just go sideways or we pull back a little bit, try to find some support, dip below the 200, come back above it, resume, go to all-time highs, easy trend trader 101. SoFi fundamentally strong. Is it fundamentally strong though? It doesn't have cash runway, that's for sure. I don't know if SoFi is being punished. Like, this is the one thing that makes me nervous. Less than 1 year cash runway. Earnings forecast to grow, has grown. I mean, SoFi does check a lot of boxes. It's cheap. It is cheap. But yeah, I mean, current price 783, fair value 243. That's not good. And I own it. I mean, I own SoFi. My break even is like $6. So I'd love to just get out of this stock. Not for a loss, but I'm hoping that if we can get SoFi back to the SPAC levels, $10 or so, I'd be happy to get out of this for, $3 to $4 a share. So that's what I'm looking at. There's 1150. I'm going to go ahead and set this one around like $10 now. We go $10 and check PNL. So I should be up like $4 a share if that gets hit. And I'm willing to let SoFi go. One that's been performing pretty well for me this year has been Rocket. I've owned this one since all these double bottoms. I did own it initially, like at this support level around 17. Options and active options has allowed me to lower the cost basis into single digits. So my break even is around like $8 on Rocket, and we're trading up to $19. It's a pretty good return. I've got my shares covered out to 21 out to December. With rate cuts and everything, helping the housing market, I'm hoping that Rocket can benefit from that. Other beneficiaries would be your Pulte's. We're up to all-time highs on Pulte. This is a home builder. Lennar ripping up here towards all-time highs, fading a little bit, but home builders have just been killing it. DR Horton or DH Horton. The heck. There we go. DHI. I mean, it's crazy because like I was actually long Pulte and Lennar and Toll Brothers when we had some bottoms, and they have not looked back at all. But shoulda, coulda, woulda. Got long everything, but yeah, this was a good little spot around $40. I had a lot of credit spreads in and some own shares on Pulte, and I was long on everything. Once we hit these highs, I was out. So once we hit new fresh all-time highs, but holy ripper, man, that was crazy to see. From 40 to 150 for some of the old biggest home builders. So cutting rates, adding supply, more activity in the housing market should help, but these have been ripped so high. I'm not buying at these levels, man. This is up, 260% from that 2022 low. I'm not that interested. So I will be looking for some pullbacks if they're offered. All right, couple more things on the watch list here. Park hotels. One thing I'm going to check a couple of stuff. I did post this in, I don't know if I posted in my Discord or posted in Telegram, but let's go to WY. So SQ. This is another one that could be a sneaky play, kind of the blockchain space. This is Block Inc. Easy for payments. Everyone had like a little adapter on their phone to take in payments. It's not as good fundamentally as I wanted it to be. This is why I chose PayPal over Block Inc. But SQ right here. So a lot of insider selling, became profitable. That's a good thing. Earnings forecast to grow, but not really a big jump in estimated value from the discounted cash flow model. So let's see here. Price to earnings, price to sales, but kind of fair value. So I don't love that. I'd like to see a little bit more upside potential. That being said, though, if we did come back to let's say we come back, I don't know. I want to keep an eye on this one because this might be just like a classic head and shoulders pattern. So I see if we came back to the lows, I'm kind of interested in buying it at a double bottom or at least a range trade. So if we come back down to the lows, I don't mind that trade. That could be a pick it up at $40, let it go at $60, $70. I'm happy with that. The other one would be if we do break this high. If we break the high, there's room to measure 1 to 2. So we could get back into, let's say 1 to 120 if we get a bit of a ripper or runner, something like that. But I'm going to go ahead and I'm going to box this in. I'm going to see if we kind of just round out this support. We had bottoms here in 2020. This thing ripped during COVID. I like this level here. So if we come back to this area, want to do some participation, and then if we just get a breakout above this recent high, then something like that for a potential head and shoulders. So not quite there. Price has to prove it. I kind of hope price wants to work its way back down. Look for this level support, and then I'll talk about SQ as a buying opportunity for me. Okay, and then the last one was WY. That was Weyerhaeuser. This is real estate. Still going sideways here. This is a REIT. This is REIT. So let me see what if they even list it here. Weyerhaeuser, WY. High level debt, unstable track record. Everything else checks out. Price to earnings, price to sales. Fair market value. Got about $8 of upside. Not super exciting. Dividends decent. Let's see, dividend track record. What's it showing for a dividend? Dividend 2.37. Not impressed. What other ones did I want to look at? Oh, LVS and Win. Casinos. We had a decent jump off these lows. $37 support, came back up to 44. That's a nice little push. I do have this trade pending. It's a 35 by 32.50. I'm looking to see if I can get some support on LVS and some support on Win. So I'm not taking them now. I'm looking to see price has to come down to 2022 lows, come down to COVID lows, and then I'm looking to get long a couple of casino plays. So WYNN and LVS, if they come to me, these are good till canceled credit spreads. All right. Any other questions? Float this out here. I just heard the bell go off, so it's closing bell officially. Markets just faded off the highs slowly today. Nothing crazy. SPY, let's go back to the 5-minute chart. Just a bunch of chop today. And there you have it. So we came down from almost 572 down to 569, a $3 move, kind of based around that. Took out today's low. Didn't test yesterday's low, so couple of orders. I'm still looking for this one. This is 723. This is a gamma squeeze I'm watching for to see how this plays out for the rest of the week. I have a 574 long call, and I will see if tomorrow's going to get a little bit more exciting with GDP numbers and a bunch of Fed speakers. If it is, hopefully the reaction is bullish, or whatever price flow we get tomorrow, hopefully it's bullish. We'll see. All right. If I don't have any other questions, one thing I would love you all to do, if you're watching on YouTube, hit that thumbs up button for me. And anytime you're watching it live, that helps a ton. Anytime you're posting questions, that helps a ton. And if you're not subscribed to the channel, feel free to subscribe. It keeps growing, which is great. I posted earlier in the chat. I posted my Telegram channel and my Discord if you'd like to check those out. This is free for everybody. So there is some Telegram activity there. I am posting at least every day. And also in my Discord, where I keep everything content-wise pretty much as clean and housed. And so, yeah, I got some live joiners today. Thank you so much. Nice to have you. Education updates. I've got some alerts. I've got a daily course that I do every single day. More to come there from Prosperity Pub and Invest Pub, and then signals from A1 Trading. And then the chat. This is where you can find me every day. If you have a question, post it here. I don't send friend requests, and I don't do direct messages. I do that because I'm trying to keep the channel safe, and I'm trying to avoid all the scammers and imposters that are out there. If you want to talk Forex, stocks, options, futures, is right there. When I go live on YouTube, it pops up here. Anytime I post any content, blog-wise or analysis-wise, or videos I do on TradingView, I post it here. I do a lot of private instructions in the evenings and weekends, and then some affiliate discounts. So if you like some of the software that I'm using, I have some pretty good deals. Buy a year, get 2 months free, get 50% off, whatever. There's promo codes for all this stuff if you're interested for some of the trading software that I use. And course on education, real-time news. I try to smoke out the scammers when we get them. And then anything else that you want to share, you're welcome to. All right. One last question. Couple more questions. Thank you. Thanks, Wes. Thanks, Donna. Who asked that big question? Oh, yeah. You're asking about the hedge funds with AUM. Yeah, Interactive Brokers was my answer there. And Jocko says, hand pink waving. I can't. I'm in Restream, so I can't see the emoji if that's what you put. So anyway, all right, everybody. I'll let you go. Happy Wednesday. Enjoy the rest of your day. I will see all of you tomorrow. Be live for the daily profit play, live for final hour.